So my name is Hannah Murphy. I'm a tech correspondent with the Financial Times based out of London. It's a pleasure to be here at the World Government Summit and to moderate this first session of the Crypto Global Forum. Without further ado, joining me to discuss the future of blockchain and industry perspective, we obviously have CZ, CEO of Binance, one of the biggest crypto exchanges in the world, joining us via video link. And then Kevin O'Leary, I'd like to welcome you up to the stage. Kevin is the founder and chairman of O-Shares Investment Advisors, a renowned investor, entrepreneur, and of course, US television star. And last but not least, Soo-Man Lee, welcome. The founder of entertainment giant SM Entertainment and the pioneer of K-pop. What an exciting panel we have. Welcome, everyone. So we're here to discuss the adoption of blockchain technology, the challenges of that, and what the future might hold. To set the scene here, about 5 years ago in 2017, the price of Bitcoin was sort of soaring through $10,000. And the conversation then was about blockchain technology disrupting finance and sort of bringing in a new era of decentralized financial systems. But today, it seems to me that those conversations are far broader and far deeper about the power of blockchain technology to shake up all sorts of industries: gaming, music, entertainment, sports, and also about the power of blockchain technology to shake up areas such as data privacy, ownership, authentication, and also about sort of how and whether blockchain technology and virtual currencies can be a part of these online digital worlds known as metaverses that companies such as Microsoft and Facebook are telling us that they want to build. All of these conversations, sort of to my mind, come under this catch-all umbrella phrase of Web 3 or Web 3.0, decentralizing the internet, if you will. So, CZ, starting with you, would you agree? How do you think about Web 3, and where are we at in terms of the development of blockchain now compared with sort of 5 years ago?
Sure, thanks. Yeah, I think the definition of Web 3 is different from person to person. I actually don't think anybody has a very precise definition of what that term means. But I think any decentralized technology can be classified as Web 3, and the newer version of Web, which will include cryptocurrencies as native currencies. So I think the definition of that word is less important, but what we see, based on what you just said, right, we have not seen that much disruption or replacement of traditional financial services like payments, which is one of the earliest use cases that's being identified, even in the Bitcoin white paper. But guess what? People today still mostly pay for coffee, lunch, using their existing payment methods. They don't use crypto for that. But where crypto really shined are the use cases that traditional financial sectors does not provide, like global fundraising, like ICOs, IEOs, IDOs, etc., or even donations to Ukraine. So that cannot be done using cannot be done very easily using fiat currencies. NFTs allow artists and content creators to monetize their work globally. Again, if you go through traditional art galleries, you don't reach quite the same audience. And DeFi and GameFi, many other things. So I think basically there's a lot of new use cases in the crypto, in the blockchain, or the Web3 space that are not overlapping. They're not disrupting the traditional industries yet. But if we look at the longer term, 10, 20, 30 years from now, they probably will. So in the short term, I don't think there's a lot of overlaps or replacements that's complementary. But longer term, I think the disruption will happen.
Thanks, CZ. Kevin, I'm going to turn to you and ask, sort of, how do you think the blockchain space is evolving? What's the trajectory and where are we at?
So I have a slightly different view. I look at it from the perspective of an institutional investor. I index for institutions. Indexing is how capital is deployed for the majority of investing in the world. And there is no participation yet at the institutional level. There's a lot of excitement about this, but the truth is virtually no institutions have put any weighting of anything into any of this yet because it lacks regulation. And there's a lot of excitement around regulation coming. That's a good thing. But at the end of the day, when and if institutions index this, they'll be putting a 1 to 3% weighting into something like Bitcoin, running a 100 billion mandate or whatever it is. So it'll be a lot of capital coming in at the same time when it gets regulated. But the way they look at it, and I agree with their view, Bitcoin is not a coin. It's just software. Ethereum is software. HBAR is software. Polygram is software. All of this is software development. And it seeks to find productivity in the financial services market, the real estate market, other hard asset markets. HBAR may be used eventually by supply chain management. It's semi-centralized. There's all kinds of different ideas coming here. And what it really requires is the regulator to regulate. So no institution is going to say, okay, great, I really think Polygon is going to be the next big thing, and I'm going to wait a 3% weighting in Polygon. They just raised $400 million. And so, but if you look at who actually invested, it was high net worth individuals. I invested in it. I thought it was a great idea, but there wasn't, I don't think, an iota of institutions involved. And so the way you got to look at that is it's really a positive in this sense. If those of us in this room understand this technology, this software technology, which is all it is, and you're willing to invest in Microsoft or you're willing to invest in Google, that's just software. So why wouldn't you invest in this software? And the only reason you're not, if you're an institution, is it's not regulated. The equity of Microsoft is a regulated security that trades globally. Same with, Google and everything else. It's just missing that last mile. So while there's a lot of excitement about what this can be, and I'm on that camp that says it can be great, nothing's going to happen until it gets regulated in terms of real price stability, real capital appreciation, and a real amount of capital coming into it from global investors. And so we're probably 2 or 3 years away from that right now.
Okay, let's definitely return to the regulation point and go into a bit more detail about that shortly. Mr. Lee, speaking from your vantage point as a music pioneer, what impact do you think that technologies such as blockchain can have on the entertainment and culture industries?
So can I speak in Korean?
Yeah, please do speak in Korean, and we have channel 2 for the translation.
Okay, thank you very much. 저희는 그 문화라는 것을 접하면서
SM Entertainment always think about and then culture technology. Culture technology is created by SM Entertainment in me.
컬처라는 것이 옛날에 우리 중동에도 굉장히 중요한
Culture is also important concept in the Middle East and then present time and in the past, and it was also important. But the problem is it failed to pass on to the generation. So that's why and then what we can find now is just and the remains. So that's why and then I think and we have to preserve, or we have to make a formula, or we make a just and then physical formation to pass the crucial heritage into our generation. Think about the music industry. That's why I suggest that and we should preserve by using a very solid form to improve the culture.
그런 것을 보면서 일단 포뮬라화되어 있는 그런 성문화되어 있는 culture technology.
SM Entertainment staff all agree with this idea of making a solid form to pass on our technology and our culture into the next generation. And think about making the formula of the math. Think about the future where we can mix this one with the technology. So technology can be mixed with the culture. And we call the situation city. We created the concept culture technology.
보편타당성 있게 이렇게 보편화될 때 저희는 IT 대신에 우선
We made the concept popular.
시티가 굉장히 중요해질 것이다라고
Even when everyone was talking about the internet,
이 블록체인과
we have been focusing on
우리가
the
모든 사람들이
concept culture.
이용하고
So through this, and then we can help people improve culture and utilize and the culture. So through city and the help of blockchain, we can create everything. So we are living in an era of creation. What is the most blessing for humans? I think it is creation. So I just want to highlight this concept city, culture, technology, and the first and our ability to create is most important. You don't need to be a special producer, you don't need to be a great composer. And even 12-year-old boy who really wants to make a song or write a song can use the technologies of a Metaverse. And then he can create. And the Metaverse and we are seeking for what is the most important thing and then making the Metaverse. I think we have to build an infrastructure and environment where people can easily use the technology. We have to resolve the privacy and issue. We have to use the technology to make people easily create. We really want people to enjoy the joy of creation. So that's why, and the copyright problem should be resolved first, which will help human beings enjoy the pleasure of creation.
Thank you, Mr. Lee. You end mentioning sort of copyright and what blockchain technology can do there. Sort of one of the things that has emerged that Cizi mentioned earlier are sort of NFTs or non-fungible tokens, essentially digital ownership certificates registered on a blockchain. Cizi, could you tell us about NFTs, which obviously exploded in popularity last year through this year? Obviously, some critics complain that what we're looking at and what we most often see is sort of apes and punks and pictures of cats online and very cartoonish drawings. What do you think has actually really pulled people to this latest NFT boom? And do you think the hype is sort of opportunistic speculation because of prices, or are there other draws?
Sure. Yeah, I think there's a bit of everything, to be honest. There's a little bit of hype. There's a little bit of speculation, but there's also there is fundamental technology invention or innovation. I think NFTs is the first time where we have a technology that can verify authenticity through the blockchain, and it also keeps a history. And so just this alone sounds very, very simple, but we couldn't do this in a decentralized way before. Before, we always have to rely on some central party that may or may not exist forever. So just because of that, this allowed artists to share their art. And as I mentioned earlier, this allowed them to sell their art globally, sell their content, sell their work globally. And they get very good prices for it because they can reach such a large audience. The liquidity is very good. Whether the prices are overpriced, I'm not sure. I don't understand the pricing of NFTs at all. I don't collect NFTs. I'm not an art collector. I'm a software developer. So, but NFTs can, like in our discussions with entertainment partners like SM Entertainment, and also like, for example, other like football clubs where they sell merchandise. Many of their merchandise are like in countries like China, Indonesia, or Southeast Asia, other countries. There's like 10x of the merchants being sold than what they sell themselves. So meaning like 90% of merchandise they sell are another authentic ones, and the clubs don't get the money for it. If you attach an NFT per merchandise, then you can solve that copyright problem. So you can solve that authenticity problem, and you can also potentially have a much stronger revenue engine. So all of these things are problems the technology can solve. Whether a GIF, a JPEG, a ape is worth like hundreds of thousands of dollars, I'm not sure. That's up to it. But in the world, if anyone's willing to pay for it, then it's worth that much. So whether the market will sustain that or not, I'm not sure. So yeah, so I think the NFTs is a fundamental technology that will stay. Whether the market is too hot or too cold, market fluctuates. That's just how markets work. So, but I do think the technology is a very useful invention, and it will stay.
Thanks, Susie. Kevin, what do you think of NFTs? What use cases, beyond the sort of collectibles, what use cases do you see in the future?
NFTs are a very interesting use case for using blockchain, and I agree with CZ on authentication. I'll give you a use case that's under development right now in a sector that most people in this room know well, watches. The origination of watches, for example, Patek Philippe, Omega, FP Journe, they only make a few thousand watches a year, and they sell a few $1 billion worth of them every new model that comes out. But the secondary market around the world is 12x the size of the primary market. And it has many dealers. The very famous one here, Suzuki, is well known around the world as one of the premier dealer brokers of watches. And the challenge you have in buying a watch after it's been owned once is they're fakes. There are hundreds of millions of fakes. And again, an NFT would really work there because you'd want to get the origination. And the way they would do that is you can scan the surface of the dial at a micro level, and there's small imperfections in it that really give it a fingerprint. So there's a lot of work going on in that area. Here's the problem with NFTs right now. If you have a smart contract on an NFT, I don't care if it's art or it's a lazy ape or whatever it is, and every time it trades, it yields a reward for somebody, that smells a lot like a security. Is that a dividend? Is that a capital appreciation? If you are digitizing art and fractionalizing it and selling it in pieces, and there's a Liechtenstein that's being sold that way right now in the US under Reg A. It actually has a prospectus. Is that a security? And again, I go back to the infrastructure of our regulatory environment globally. If it smells like a duck, walks like a duck, swims like a duck, it's probably a duck. And if it's giving you interest and it's paying you capital after you've purchased it, and you don't think it's security, you're at risk. You're at risk for trading something that is eventually going to be ruled as a security. And I think that's holding back the entire NFT market outside of the JPEGs and everything else. Again, we're waiting for the regulator to regulate. Now, the Loomis bill, which is going through a bipartisan agreement on the Hill in the United States, is going to get tabled in the next few months. It has a lot of very positive policy in it for blockchain, Bitcoin, Ethereum, and several other items that it deals with directly. But it does not deal with NFTs. And so we are a long way away from having this resolved. And I would argue that every financial institution in the world is not going to trade this unless they know with certainty it's regulated. You would be so offside trading something that yields interest if you're an institution, I mean, that's why it's interesting, but it's nowhere.
Right. The ambiguity is holding it back for the moment.
Yeah.
I see. Yeah. I wanted to follow up and ask about another concept, sort of the metaverse. And sort of how important do you think blockchain and virtual currencies might be for the metaverse or the metaverses that may or may not come in the future?
I think the metaverse has a great opportunity and a big problem. And here's the way to look at it. The use case for it today is in gaming. There's no question that that's going to drive adoption. And I'll give you another use case that actually is happening in Miami right now. There is a developer selling high-end condominiums now. They don't have any virtual existing building. They haven't even broken the ground. They're almost sold it out. they did it all on a model of a metaverse. In other words, you went and saw your condominium with goggles on. You actually walked through it. You saw all the amenities, the pool parties, the restaurants. You could walk in and sit down in the restaurant. They spent a few $1 million setting this up, and they sold out a multi-million-dollar condo project. So there's tremendous possibilities, even in these early iterations. But here's the problem. What's going to drive this ultimately long-term is advertising dollars. It's companies wanting to attract you to their product and service on the metaverse and making that really interactive experience be something special. So whether you're buying a car or a pen or jewelry or food items or alcohol or whatever it is you're buying, you're going to find it somewhere on the metaverse. But if you're a big brand, a global brand, you're not going to put that on an uncurated metaverse. There's two paths being pursued now. A curated metaverse, hailed by the Facebook of the world and others, Microsoft as well, where they will guarantee you, if you're Procter & Gamble, your store will not be sitting beside a porn shop on the metaverse. And you're going to pay for that. You're going to want to be curated in your section. On the other hand, if you're a cowboy and you're just rogue and you want to have fun because it's unregulated, there's plenty of unregulated metaverses being developed. I don't see how they're going to survive long term unless the use case is for gaming and some subset of the gaming market, because no advertiser is going to put their product or service into an uncurated environment, because it'll just be chaos. And so the market hasn't decided yet. It's too early. But that's going to be the fork in the road. That's going to be the difference. It'll get real when Procter & Gamble advertise in a curated metaverse. That's the way I look at it.
But presumably in these virtual worlds, there'll be virtual currencies. I mean, Mark Zuckerberg's vision is a sort of a huge economy of people selling digital goods and services to each other in these spaces. Does that chime with you?
I'm the only guy in the world that doesn't hate Mark Zuckerberg. I got to tell you, I love the guy, because he kind of understands this, but he's got a really bad rap out there, and Facebook has a bad rap. But he's probably going to be the first to do this, because he already has billions of users, and he can curate it. He can go to a company and say, I'll create a safe space for you, here's the cost, and I'll bring billions of users to it. Now, whether it's tokens or gaming, or whether it's advertising, or whether it's an experience, like selling real estate or whatever it is, he's the only person right now that can deliver that many users. And so while everybody, that stock's been cut in half, I'm a buyer of that stock here, because I actually think he's going to get there first. But that's a decision every investor has to make. And it's a controversial one. But you need users. You need billions of users. There's no other company that has that many that can do this.
Mr. Lee, I wanted to ask you what significance NFTs and the Metaverse hold for you at SM Entertainment?
NFT와 메타버스의 결합은 아마
The combination in NFT and the Metaverse can shape the future economy. I think Mr. Wonderful also mentioned, and I also think, and everyone knows about that. So that's why, and then I'm not in the right position to talk about that. What I want to talk about the Metaverse is Metaverse is a new creation, a product of new creation. Sometimes we cannot create something because we don't have experiences. It is creation. So if we are given an opportunity or ability, and it is creation that everyone wants to do. So that's why I see Metaverse as kind of creation. So that's why we have to provide right infrastructure to help people create. Through Metaverse and through blockchain, we can protect people. What is the starting point of a Metaverse? I want to talk about play to earn. Play to earn, this is the starting point. Our goal should be the higher level. What we ultimately want to reach is play to create. So we should enjoy the creation as a play, as an entertainment. So normally we think and then the creation needs a lot of efforts and a lot of time. No one is interested in creation, but it's not true. For me, and for the people who produces music and dance, we are one of the most happiest person in the world. How about a person who make a math formula? Actually, I believe they are living very valuable life. So, play to earn is the concept where people in the agricultural society was using. Actually, and then we human beings could live in a very stabilized economy using the agricultural technology. And I believe, and which was the starting point of the great civilization. So compare this concept to that kind of evolution. So now we are living in an era of play to earn. Now we are captured by the metaverse world. But I think the goal and the end of the metaverse should be play to create. So to make metaverse real through city culture technology, we are helping people use the technology. I can tell even the 12-year-old boy or 60-year-old boy can create anything like dance or like music. If you want to write a song, you can do that. It should not be your main job. Now people are thinking to do their side job as like as to enjoy their hobby. SM Entertainment is a company who is trying to build and kill contents. I'm committed to making this creative environment with a lot of producers. Even 12-year-old boy wants to create things like music, and he doesn't have any experience, he doesn't have any ability, but he can create a song, he can write a music through this technology, through Metaverse. To make it real, I am committed, and my company, SM Entertainment, are committed to making this real. If you want to dance very well, and you can dance well, regardless of your worker, you can use your avatar in the Metaverse world, and you can create anything in Metaverse world. This is the concept of play to create.
Thank you. It's fascinating to hear about sort of the influencer and creator economy and how this could sort of fuel that. I want to speak to some of the challenges in this space. CZ, from my perspective, this is still very nascent and markets are very immature. You see a lot of market manipulation, a lot of scams. The media likes to jump on these often. What do you think are some of those challenges in the space, and how can they be overcome in order to sort of bring in regulators, as Kevin has spoken about, for that last part of the puzzle?
Sure, I think the industry will solve those problems, and most of the problem will solve itself. Number one is the blockchain crypto industry are very transparent. So if you trade on using DeFi, you can see who's manipulating the market, who has large orders. All the orders on the blockchain, you can trace them. And I think right now people are still quite new to this world, and they don't know, many of them don't know how to analyze it yet. But the law enforcement are getting exceedingly extremely good at tracking some of those data. So for example, if you look at the Bitfinex hack, the hack happened in 2016, and then a couple of months ago, this hacker started using some of the funds. They got caught right away, and those funds actually went through mixers to try to hide their tracks. But even then, the law enforcement tracked that right through. So the tracking is actually much more transparent, which actually means that illicit activities, manipulation, all of those things are much harder to do in crypto. And also, in the crypto market is actually, from a trading perspective, is actually much more fair. Bitcoin trades on thousands of different exchanges around the world. And it's actually much harder to manipulate the market. Whereas compared to traditional stocks, most stocks only trade on one market. And so if you can manipulate that one stock on that one market, you can actually much easier to manipulate the price. So the global nature of crypto is actually much better in terms of being fair, etc. I think also the regulations are shaping up. So now we have many different countries. Some countries have bad regulations. So not all regulations are good. Not all regulations are bad. Good regulations are good, bad regulations are bad. Some countries, like, they outright ban crypto. I think that's good. That's going to hurt the economy in the long term. That's not good for themselves. There are countries which are adopting a much more open stance to it. On a couple of the points, I actually have a slightly different view to Calvin. I think he and I have a slightly different worldviews. I think institution adoption is happening. It's just that, okay, if you look at the institutions in the U.S., yes, many of the larger ones needs to wait for regulation to become 100% clear to be able to do stuff. Many of them have invested in other crypto startups or other crypto funds, or even spin-offs of funds that are trading in crypto, and there are institutional players trading in crypto in a large way already. And I also believe that price stability is a function of the market cap. If Bitcoin's market cap reaches 100 trillion, it will be very stable. When it's 2 trillion, it's going to be less stable. When another asset is 1 billion, it's going to have higher fluctuations, because if somebody puts in 100 million, then the price is going to fluctuate more. So the price stability comes as a function of market size, not so much regulation. Regulators don't. I believe of all the regulations in the world, there's no regulation says that the price of a certain thing cannot move more than X% in a single day. There are circuit breakers on different exchanges, but those only work in short term. If we look at some of the tech stock, real estate, etc. If you look at the Russian ruble, they all have dropped significantly. I think a free market is much better for determining the real price of things instead of regulations trying to stabilize things. Also, there's a couple points earlier on the metaverse part. I actually don't think metaverse will necessarily have to depend on advertising dollar. Advertising dollar is a very much Web 2 business model. You drive traffic, you have a lot of eyeballs, and then you sell ads to your users, which typically involves in selling a lot of the user data. In a Web 3 model, you have transactions directly. You can have microtransactions. You can have people pay you 0.1 cents for reading an article, for playing with for using a new weapon, for interacting with your virtual environment. So there could be very new business models that come up that does not depend on advertising. So advertising is not. I actually think advertising is a really bad business model, because it sells the user information. The users become the product, which is bad. We should the way businesses make money should be more transparent, and actually Web3 allows that much more transparent business model. I also don't necessarily agree that I think Facebook has a lot of advantage given their user size. But I actually think in new industries, typically newer players have a lot of advantage as well. They're more nimble, they're more agile. Facebook is not the biggest social media player. Microsoft is not the biggest search engine, and IBM is not the biggest OS or Office producer. So every time that when there's new industry coming up, the older big giants, they are optimized for one thing. And sometimes the over-optimization makes them harder to change. So there are differences, but there are also many cases where the giant was able to use their market dominance to win new services. Of course, both exist in abundance. So, but yeah, I just want to point out some of the differences that may exist. And lastly, regulators don't create regulations in a vacuum. They only create regulations after an industry exists. So they don't dream up of regulations for NFTs today, because NFT is so new. regulators don't predict the future. They don't drive industries. What they do is they protect the industries and they protect the users once the industry forms, which is still very important. But regulators are not going to sit there, dream up of what's going to happen in the future, make regulations. The larger players, the larger existing regulated financial industries, yes, they are slightly disadvantaged because they can't move until this regulation. So basically, if you think about an empty road with no speed signs, the existing financial players, they cannot drive at all. They just have to wait. Whereas the startups, they drive as fast as they can because there's no speed sign. There's somewhere in the middle, which is probably better. Look, you're gonna drive at a speed where other people are driving, where it's safe, but you want to be innovative. So there's different players in the industry operating in different modes. So that's kind of how I see regulations. But fortunately, there are many progressive governments, like the governments in Dubai, in UAE, and many other parts of the world, that are pushing regulations for crypto in a big way and in a very positive way. So I'm very, very positive about this industry moving forward.
Thanks, Susie. We've only got a couple of minutes left. I have a couple more questions. Kevin, I want to ask really quickly, do you have any thoughts on what Susie said about price stability being solved by the size of the market?
Size of market and price stability, they are correlated. But what matters in a security, if you want to call Bitcoin a security, is to have the broadest market possible. It's great that it trades on a lot of exchanges all around the world, but there's a very limited demand use case for it right now because there's virtually no institutions that own it. If it was tomorrow and the regulator in the US said that we're going to allow Bitcoin, and the test would be what the Canadian market did. They allowed the very first exchange-traded fund to trade on a Toronto exchange, a Toronto stock exchange, a traditional institutional vehicle, and the underlying security was Bitcoin. Then they issued another ETF with the underlying security being Ethereum, and they were wildly successful. They had billions of dollars in them within hours. And so the potential is great. And the whole idea would be that if other regulators, specifically the SEC and the Federal Trade Commission, allowed the same structure, a tested structure, already done in Canada, already working, and allowed for a US ETF, that would create an institutional demand for the product. And there's no question that the reason you have 50% volatility almost every 11 months in Bitcoin is there is no bid at the institutional level. They're just, for all the excitement about it, it's a zero bid. And so you're going to have vol until this thing is an institutional product, because the reason you get stability is when you're an institution and you allocate, typical allocation might be 1.5% to 5% max. You're running a typical mandate. There's 11 sectors in the S&P. You're allowed to own up to 20% in any one sector, but no more than 5% in any one stock. The same thing for Bitcoin. So if you had a $100 billion fund and you allocated 150 basis points, there'd be a lot less volatility, because when it trades down and you're the manager, you buy it back to 1.5%. And when it exceeds 1.5%, your limit, you sell it. But that amount of demand increases the volume by 1,000x. And that's why I say, and I still say this, and I've been saying it since 2017, it's going to get real when the US regulator allows an ETF with Bitcoin in it. You want to own Bitcoin the day before they do that. That's my argument. And so I don't know when that's going to be. There's 17 licenses applied for right now. I don't see we're going to get it this year. I don't think we're going to get it during the Biden administration. So maybe you've got to wait 3 years. I don't know. But I'm adamant on it. When the institution buys it, it's real. And when that happens, it's going to appreciate in value dramatically, probably more than anybody can even guess. So if you want to see $100,000, $250,000 Bitcoin, the only way that happens is when institutions can buy it.
So if the answer is regulation, what exactly, in an ideal world, what would you like to see in terms of what regulators do, and sort of should crypto regulations be carved out and there be sort of more specific crypto regulations, or sort of brought under existing financial regulation?
Well, what I want and what's actually happening are two different things. So let's talk about what's really happening. There's 4 vectors of regulation happening right now and happening very quickly. Number one, the Loomis bill. We've talked about it already. Going through a bipartisan group of senators and congressmen to be tabled in the months ahead. Does not deal with NFTs. Number two, the SEC is contemplating auditing carbon. Now, you may think that has nothing to do with crypto, but it does, because the granddaddy of crypto is Bitcoin mining. And for most institutions that wanted a proxy to Bitcoin pricing, they couldn't buy Bitcoin, so what they did is they bought the shares of public Bitcoin companies. Marriott, I guess Hive, I'll give you some of the ones that are indexed in the US, Marathon, Hive, Hut 8, those are the kind of stocks you could own, and they traded in almost perfect correlation to the price of Bitcoin. However, they all use carbon offsets to say that they're carbon neutral. Well, if you read the tea leaves of the SEC ruling or contemplation, and that's the number two vector, number three is the president's own executive order, which talked about climate change, which was a direct swipe at Bitcoin mining. And then lastly, you've got the Larry Fink BlackRock letter that is against anything to do with hydrocarbons. And so all of a sudden, if you have to audit the carbon credit, these companies aren't clean anymore, because there's no way to audit a ledger-based carbon credit versus the offset of how much electricity you're using from a carbon source. So this is a bad news for Bitcoin. You're going to see a lot of this discussion next week in Miami at Bitcoin 2022 in trying to figure out how to get around this problem. The only way around it, hydroelectricity for Bitcoin. That's the future. And nuclear power. Those are the only two that you can say are green mining. So there's a lot of cross currents in the policy right now that are going to come to hurt certain aspects of crypto, Bitcoin being the first one that's going to get damaged around this ESG issue.
Thanks, Kevin. Given we've only got a couple of minutes, we may already be over time. I'm just going to finish and ask Susie, ideal world, what do you want regulators to do?
In the ideal world, we should just say, look, have the business. Let's fight the bad players in the space. The scammers, the hackers. Let's fight those guys, and let's regulate crypto as a new asset type. I think one of the things that happens quite a lot in this space is that people try to use the existing asset type to classify crypto, and this is like classifying cars into a type of horse. It doesn't quite work that well. And it has a lot of legacy issues. And the existing classifications usually will put them into an existing regulator agency. And so what we have seen Dubai do really well is they set up a brand new agency to regulate crypto. This new agency does not have the legacy issues of protecting the incumbents, etc. So I think this will really help the crypto to grow in this region. So yeah, I think basically we look for the regulations are not all set because the industry is still growing, and we just want to look for regulators with an open mindset. I think that's the most important part.
And crypto is ready for that. Sort of historically, it's been thought of as a little allergic to regulation, but is crypto ready?
I think crypto's ready. I think regulations does not hurt crypto. Just bad regulations hurt crypto. Bad regulations doesn't actually hurt crypto. It just hurts that country. It just hurts citizens of that country. So there's 200 something countries in the world, and each one of them may have slightly different regulations. Many of them will be good, and good regulations is good for crypto, and it's good for the population. It's good for that country.
Thank you so much. I believe that's all we have time for. I'm going to hand over back to the team here at the Global Crypto Forum. We also have a break for lunch at 12, and then we will be back in the TDRA hall from 1 p.m. Thank you very much. Thank you to everyone here today.